whether it be a strengthening of the yen or higher interest rates of the yen or falling interest rates here in the West, it unwinds the carry trade. And it's like it started in the UK last year. They tried to normalize their balance sheet. They tried to impose austerity. What happens? Their pension program, poof, it starts to vaporize. So what do? They backtrack. We're sorry, and go the other way. The U.S. we try to normalize rates. We try to normalize the balance sheet. Quantitative tightening, rates are rising, and poof, the banks start to fail. And oh boy, we better not go higher than 5% on the 10-year. And now they're calling to go the other way because the system is so fragile. Just like the yen, they try to raise rates, strengthen the yen to protect their own sovereignty, and poof, everything goes nuts. And it wasn't just the United States. It was Singapore. It was South Korea. It's here in the United States. The ramifications are far-reaching. So what it really is emblematic of, Danny, is that the whole Western financial system is so over-leveraged for 15 plus years of low interest rates. And in the case of Japan, almost 3 decades of zero bound rates creates and incentivizes massive debt, massive amounts of debt. And when you then try to raise rates and normalize things, servicing that debt can become very tricky. And when you add in all of the leverage of the financialization of the world and the way that everything is so commingled systemically through derivatives, $1 quadrillion in derivatives, it becomes that much more dangerous. But what it speaks to is that Japan, the UK, and the US, 3 very broke, insolvent countries, will probably never be able to normalize their balance sheet. And maybe that's why everyone keeps talking and hearing the word reset, because you can't go back without creating a tremendous amount of pain. And the United States, I think, if you look at 2008, Danny, if they just would have let the forest fire burn, it would have sucked. But we'd be on our way to recovery way long ago, because if you look at what happened after the great financial crisis in 08, the Fed's balance sheet was $800 billion. And a year ago, it was $9 trillion. So since that point, the way that they remedied the situation is by messing with Mother Nature again. It's all about suppression of interest rates. So they stepped on interest rates, which incentivized massive debt accumulation, both by the public and by the state. But more so, it destroyed price discovery. It creates misallocations of capital and resources. Companies, they hire more, they build on other divisions, they might buy another building. Same thing with people. Low interest rates, they buy a house that they shouldn't buy. That's probably more than they can afford because rates are so low. And they refinance and take equity out of their home and buy a whole bunch of stuff and take trips and do crazy things. And now what? When rates rise, what do you do? And I think that's the problem here, is that these low interest rates have created an environment that is very difficult to get away from, very, very difficult to get away from. The entire West has the exact same problem. And that's why I focused a lot after Klaus Schwab said there'll be a great reset. You'll own nothing and be happy. I mean, look at house affordability. Because of the distortion and the suppression of rates, and house prices got so high, the majority of young kids could never dream of owning a house right now, especially as rates go higher. So the distortions need to work themselves out. If they just would have let the forest fire burn, it would have sucked and there would have been a lot of pain. But look at a forest after a fire a few years later, it's stronger than ever, as would we have been. Mother Nature will not let us get away from this unscathed. So it's either to fully inflate your way out of the problem, which ends up to higher rates and the whole system blows up. Default. I've gone with find a villain for the last 3 years by incentivizing the world to dump dollars, to shed our petro status, to go green, to weaponize the dollar, to let the country fall apart and make everyone say, shit, why am I holding dollars in treasuries, and dump them? And then we can point to the villains that did it, Xi Jinping and Putin and OPEC. And option number 4 is an interesting one too, that you hear more and more and more and more people talking about, and that's to revalue gold. Even Senator Loomis from Wyoming, after the Bitcoin conference, right after Trump spoke, she was the next speaker and said her bill was to revalue the Fed's gold to create enough money to buy the Bitcoin, to take some of that proceed to buy the Bitcoin, to create a strategic Bitcoin account. Just like the head of the Dutch National Bank has been saying for over a year, that the gold and the gold revaluation account, I mean, that's the name of it. You can't make it up. We could revalue it and make our balance sheet pristine, just like that. And if you think about it, That would be one move that we could make. Put gold at $100,000 an ounce. And people say that's insane. Well, why is it insane if Bitcoin can be $1 million? I don't think it is insane. It's just people's view on things. It's the suppression by the Western banks that have never let it reach its price. But if every $4,000 increase in the price of gold adds $1 trillion free and clear to the TSA, the Treasury General Account, or TGA, the Treasury General Account, and Janet Yellen wouldn't even need congressional approval to do that. She would just need to tell Jerome, hey, revalue the gold right now and put it at $20,000 an ounce, and that adds $5 trillion to the Treasury, just like that, free and clear, that they can spend any way they see fit. That's about the one thing that we could do that could fix the balance sheets, but also make every country on the planet probably happy, because every single one of them has been stockpiling gold, and just about every central bank in the world owns some gold. So that's an option that's not off the table either. You got 4 options: inflate, default, find a villain, or revalue gold. I don't know which one it is, but something's got to change, Danny. You can't keep creating $1 trillion of debt every second, 24/7, especially when you have 10 to 11 trillion in debt that needs to be either refinanced, bonds that are coming due that the Treasury doesn't have enough money for, so they need to sell more bonds in order to pay the interest on the old bonds. That's like a Ponzi scheme, if I'm not mistaken. And this goes out to 2030. And, at 1% rate, 500, or 5 trillion in debt is a 500 billion payment. But at 5%, it's a whole different thing. So yeah, there's going to be something that happens that breaks the system, resets the system, whether it be painful or not, or there's a villain or not. I don't know. But yeah, something's going to break. I'm fairly certain of that. So the Japanese yen carry trade debacle is just a sliver, I think, of what has to happen for the Western system to deleverage, because the amount of leverage they've created has to be dealt with and has to be reckoned with. And when rates and asset prices find equilibrium, those asset prices will be a fraction of what people think that they actually are now.
Who stands to not benefit from a $20,000 reevaluation of gold, though? You did lay out the case for a reevaluation, that it would benefit a large number of the Eastern world, because those are the banks that have been buying up gold for the last 10 plus years. But who stands to not benefit? Who stands against this kind of, this option 4, if you will?
Probably the public. I mean, because it would create a lot of inflation, but the whole system wouldn't blow apart. It would be the central bankers that truly benefit. I want to read to you something here that I just read that I found very interesting. And of all places, it comes from Forbes, right? And for the last forever, I've never seen a Western news service say anything about gold that wasn't, yeah, but it's negative. So they'd say one thing that's positive, but yeah, but kind of like talking about gold and saying how China stopped buying gold for 2 months and, well, the price is going to fall. Now, first of all, that wasn't true. The export numbers out of the UK show that wasn't true, or the commercial banks. The way that the gold is shipped shows that they've been buying it. They haven't stopped. And I said that right away. But there's always something that they talk about in a story that's not positive. Now, before I read this, Judy Shelton, if Trump were to win, she'd be the Fed chair, or she'd be who he would nominate. And she's a advocate of the gold standard. She's also talked about buying 30-year treasuries and linking them to gold so that they are redeemable in gold, so that people would actually buy longer duration treasuries. But of course, the gold price would have to be a whole lot higher. But let me read you something that just came out of Forbes. The article it says, it's hard to believe, but the world is beginning to lurch toward a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, Russia, and a number of other nations such as Poland. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And here's the part about Judy Shelton. India last year began experimenting with gold-based government bonds. And so India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It's Bad, and How to Fix It, observes these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every single stock and bond market worldwide.
Wow.
And so there's more, I'll skip it. But the bottom line is that, you know, I think that it benefits the system, it benefits the governments, it benefits everyone, but it would create greater inflation. And I don't know exactly who, if anyone, would really not benefit, because the opposite of some sort of like Operation Sandman, where everyone dumps dollars, and everyone in the world has had to stockpile dollars for 50 years. And if those dollars all hit our shores at the same time, along with the dumping of treasuries, interest rates would spike to triple digits. Well, maybe not that high, but high double digits. And in that event, because you can't have high double digit inflation without interest rates to compensate, or your currency dies. So at that level, stocks, bonds, real estate, the banks, and the insurance companies all vaporized, just like that. And there's your reset. And maybe that's what Klaus Schwab was talking about. I don't know. I think a gold revaluation would be a much gentler way of resetting the system and issuing a central bank digital currency tied to gold. And I find it interesting that both Trump and Harris have embraced cryptocurrency all of a sudden, which leads me to believe almost like they are listening to the Federal Reserve, who is hinting we will be transitioning to a central bank digital currency, some form of a cryptocurrency, whether it be, it won't be open source and decentralized, but it will warm people up to a digital currency. And I think we will go in that direction. And heck, the #2 advisor to the US government, who was #2 at the Fed underneath Powell, Lael Brainerd, she's a modern monetary theorist. She helped design the CBDC with MIT when Biden fast-tracked it into law, at least the development of it, by executive order. So, I mean, things are changing. That's the moral of the story. And I think we are at the foothills of a Rubicon that we will cross. The question is, will we retain our world reserve status and do so in a way that is not painful? Probably not. Or will we lose the reserve status and actually default or reset in a painful way?